On the Tape is presented by CME Group, where risk meets opportunity, and iConnections, reimagining how the investment industry connects. Welcome to the On the Tape podcast. Guy Adami, Danny Moses. Dan Nathan went to visit his mom. His mom turned 81 earlier this week.
Happy birthday, Mrs. Nathan.
Happy birthday, Mrs. Nathan. So he flew to Syracuse, which is interesting. Syracuse, obviously, there's an Italian element to that. But, we'll get into that in a second. Obviously not Syracuse in
I understand.
Sicily.
It was supposed to be an hour flight back, and
Yes.
lo and behold,
Weather. He said, he texted us and said, is there weather in New York? And I was about to type him back and say there's actually weather everywhere.
I could put his glasses up on here.
No reason.
Okay.
So it's just the two of us.
Yeah.
Okay. And it's interesting. You have a list of favorite movies. You've shared this with me before.
Yeah.
Right or wrong?
Absolutely.
I know one of these movies because you quote it all the time. You're a big fan of Gladiator.
Huge fan.
I mean, Russell Crowe, say what you want about him, but he's a brilliant actor. Yes, no?
100%.
Richard Harris was in that movie, if you recall.
It was all great. Joaquin
Phoenix.
Amazing.
Joaquin. I just like saying Joaquin because it's a fun name to say. But there's one cat, his final role in movies, a gentleman named Oliver Reed. I actually think he passed away during the production of Gladiator.
He was the head of all the gladiators, right?
Proximo.
Yeah.
And his scenes were fantastic, and he died at the end of the movie, and whatever. But
effectively sacrificed himself.
He sacrificed himself. He knew he was going down.
He knew he was going down.
We're all going down at some point.
We're all going down.
I mean, some of us sooner than others. I feel like, however, win the crowd and you will win your freedom. Win the crowd and you will win your freedom. And it's sort of like this, understanding the mob mentality. You have to understand, back then in ancient Rome, you had to understand the mob mentality because once the mob gets its arms around, you're not going to stop it. And why do I mention that? Because right now, Jensen Huang is winning the mob, and he is winning his freedom in the form of now being the 13th wealthiest man on the face of the earth. By the way, for those playing our home game, he is the founder and CEO of Nvidia. And as we're sitting here today on this Thursday, that company breached the $3 trillion market cap number, which is remarkable and good for them. But, it reminds me of, everybody now, there's this fervor around it, and you've created sort of this mob mentality not only in terms of the dialogue that goes around, but just in terms of the passive dollars that are finding their way into these various ETFs and these various stocks. So, Danny Moses, as I tee you up on the Gladiator front, and you are sort of a Russell Crowe-like person to me.
Well,
I'm just saying.
Yeah.
Who would I be in that movie? Like a Richard Harris, right? I'd be sort of the
failure
old dude.
as a podcaster is my failure as a host.
Right.
Yeah.
Right. True.
Right.
So you're my Russell Crowe. Is that fair?
That's fair. So there's two Gladiator things I want to get into.
Okay, well, it's your
right.
It's your
So
podcast.
I have been on this Nvidia, as you know. I've been haven't been long it. Shame on me.
Well, no.
Hold on. But I haven't been short it, and I've been hesitant to do it. So the scene in Gladiator where they're in one of their battles towards the beginning, and Russell Crowe says, "Hold the line."
Right.
Hold the line. Hold the line. Hold. Well, that's Braveheart's.
No. This is when they're in
hold
Colosseum. They're in the Colosseum, I think.
That's different, right? But this is hold the line,
and
okay.
it's like okay,
all right. So it's time.
So you're ready.
And hold on, and just to bring in the Lion King, it is time, Simba. Okay, it is time. Okay.
All right. So hold on a second.
Okay. Here's why it's time.
I want to put this sort of line in the sand because I don't disagree with you. By the way. As we're sitting here today, again, I want to emphasize it's Thursday.
You're going to say the other side of something. What integer is it up to at this point?
No. Well, the stock made an all-time high today of $1255.87. As we're sitting here right now, it's effectively $1,200. So it's given a little bit back. That's not the point. I just want to sort of bring that up. Sort of, you sort of point of reference.
All right. So we got
point of reference.
We got a 10-for-1 stock split tomorrow. Yay. So retail, obviously, ahead of that has been buying.
Yay?
Yay. Okay. Has been ahead of that. So obviously, that's one reason. There's just the retail frenzy that's going on, and we'll get to some of the meme stuff later. But what's interesting? It kind of fell by the wayside. And if the stock had been down this particular day earlier this week on the Intel news, right? Intel basically held a chip day or whatever they have, and they're coming out with competition, as is AMD for Nvidia. And Intel owns their own foundry, so it's more vertically integrated. And they're like, we're coming out with a chip.
Competition
that's cheaper and better. Now, they'll keep leapfrogging each other, but the point is that we've been trying to make is that now 3 people competing in the same category. It's hardware. Margins don't stay up at 70%, mid-70s, and hard. It just doesn't happen in the history of technology. It can stay there while no one else has their product. Sure, but I look at Intel, and I'm not saying to go long Intel, but I look at the market cap, I look at their revenues, and I realize it's not all geared towards AI, and you start to say to yourself, how are these two? It's almost like, we'll get to Tesla later, looking at Ford versus a Tesla or GM versus Tesla. Are you reinventing the wheel? What are you changing? Are hybrids catching up to EV? You're the first to EVs. It's kind of the similar mindset of you're willing to give the benefit of the doubt, and these market caps are crazy. So you have that. Then what else do you have? You have Jensen now filing in a 10b5-1, so it's officially, not a outright sale, but a pre-planned sale to sell what is equivalent based on the current, up to $850 million worth of stock.
You know what my people say there? Mazel tov.
Mazel. My people, your people, we all say.
Well, it's interesting because there are a lot of, that is not specific to him. I mean, there's seemingly a lot of founders, a lot of CEOs that are doing similar. A lot of it, as you said, in a way that's sort of predetermined. They're not doing it. I'm not suggesting he's doing it.
It's pretty. They have. You can change it. You can alter it. You can say, when the stock price gets to X or on certain days. It's manipulated, but it's a quote preset. We'll get to that some other time that Congress approves that stuff. But my point is this: competition is coming. I'll do a Dan's people competition's coming.
Right.
Have at it, people. You got a 10-for-1 stock split.
Dan Nathan.
You have Jensen filing to sell shares. It could go up another $200. Why not? It's at $3 trillion. Go to 3.1 trillion. Whatever. I don't really care. But certainly now's the time to lighten up on your long position. And I believe now is the time to take a shot on the short side.
So you mentioned Intel, and this is something that I've talked about for a while. Now, we started this talking about Gladiator.
Yeah.
Right?
Yeah.
I mean, those were pretty, men, shredded dudes. Was shredded like in shape. You know where I'm going with this? No, you don't. I know because you're looking at me. No, you're looking at me quizzically, which I love it when you do that because I'm going to sort of throw you off. There's one cat that founded a company, and he wasn't particularly jacked or ripped or cut or any of those words.
Oh.
He went on to be he's one of the greatest founders of all time. And this individual said that your margin is my opportunity. That's the now very ripped Jeff Bezos. I mean, he could be a gladiator.
Absolutely.
It's sort of freaky what he's transformed himself into. But to your point, Nvidia, good for them, number one. I mean, it's an amazing company. But the 77% margins that they're enjoying today, I'm hard-pressed to believe will be the 77% margins this time next year or sooner because, as you said, competition is coming. And this, historically, semiconductors have been one of the most commoditized cyclical businesses known to mankind. And I've said this, and I don't know how you feel about this, but what I've tried to illustrate is at a $3 trillion company, their market cap, which will do $150 billion in revenue next year. You can do that math. They are trading at approximately 20 times revenue. Their earnings per share, their metric sort of price to earnings is reasonable at 34 times given their earnings growth. But what I've tried to bring light to is they're out-earning their revenue stream, and that manifests itself vis-a-vis margins. And at a certain point, that 20 times is going to get whittled down, and it's probably going to happen in the form. And you're shrugging your shoulders because I think you agree with me.
Not only do I agree, but Hewlett-Packard, for instance, comes out. What do they say? Oh, we're going to be ordering a lot from Nvidia. We know that already.
Yes.
That was already in Nvidia's guidance. So when I start to see things like that, that's what. Now, within the Roman Coliseum, I'm going to take
Have you ever been there before?
Yes, I was actually just there recently.
It's amazing, isn't it? You should go at night. It's amazing. It's just, it's fascinating.
There was Elon Musk challenged Mark Zuckerberg to a jiu-jitsu match. And he actually said one of the places they could go is the Roman Coliseum.
Stop it.
They didn't mention it. But let me just say, there's another line from Gladiator. Another line from Gladiator where Russell Crowe says to Joaquin Phoenix, the time for honoring yourself will soon be at an end, which is one of the greatest lines in movie history. Okay,
basically, you're done. Your time on. Listen, I might be going down.
Wait, so
you're going down too.
So the Musk proxy vote is June 13th.
What gives a muskrat his musk?
The smell.
No, courage. That's from the Wizard of Oz. See, anyway. I do this just to sort of throw you off.
Yeah, you really
please
ruined
continue.
Me. Anyway, where was I? So the vote is June 13th, June 12th at 11:59 p.m. The chairwoman, Robin Denholm's all over the place, pleading her case. Please, vote yes, vote yes. So the people, the ISSs of the world, the Glass Lewises of the world have come out against this pay package. I won't go back into this.
You're talking about Elon Musk now.
Pay package, right? Because he's going to leave if he doesn't.
Ron Barron, who you know, he was on. So on Wednesday, I believe he was on the Squawk Box talking about that he was going to support the pay package.
He doesn't have enough. So
just throwing it out.
So the proxy advisors, let's say you're a Vanguard or BlackRock, which actually are the two largest holders outside of Musk, right? Because it's in all the passive funds. I assume will vote no because they're going to follow Glass Lewis and what. So Musk can't vote. So you need 50%, just for people that are out there in this ballot world, a ballot year that we're going to have in everything. Take out 14% of Elon and Kimball, basically lose you 86%. You need 50% to vote yes. You have to assume that the passive funds are voting no. So Robin Denholm's out pleading her case. Meanwhile, she has sold $50 million worth of stock this year. She's making the case that Musk has been working for free. Guess he has sold billions of dollars worth of stock over the years. So I don't get that. And here's the weird connection, right, between today's episode of Nvidia and Tesla, what Musk did with the ordering of the Nvidia chips. He moved them, what was supposed to be intended for Tesla, and then came out and tried to go backwards on it and really explain it, to his XAI and to X.
Okay, so I'm going to stop you there for a second.
Yeah.
Because it seems to me, like I understand why he'd be able to do something like that because he's the overseer of all those companies.
Because he's never checked. No one ever
there's
checked.
Got to be, I would imagine, each of those companies has their own board of directors, and it doesn't pass the smell test. Like it
really? Are we really having this conversation?
No, well, sort of, because I don't know. Again, I'm not a lawyer. I didn't go to law school.
It's a one-person operation.
I can't believe, though, that there's got to be something inherently wrong with ordering something for one company. Say, this company doesn't need it. I'm going to give it to the other. Yes or no?
Yes.
You're looking at me nuts, but I'm actually asking a serious question.
Especially the fact of if he tells NVIDIA these are for the cars, NVIDIA says, okay, we'll send it to you because we're prioritizing. And then he bait and switches them, where he just raised $6 billion, as we know, for this XAI, I think, whatever. It's all part of
his. It seems a little odd.
So, odd or not, Musk has broken securities laws. He's paid fines for it. No one mentions that during this wonderful corporate governance roadshow that they're on. Point is that it's a big day next week. We got the Fed next week as well, a lot happening. We get the BOJ the week after that. So there's a lot of things going on right now. It'd be ironic to me if, obviously, Musk gets voted down, how the stock's going to react, but it's becoming like a binary outcome. And I get it. Whether you love Musk or not, you have to appreciate the fact that without him at the helm, or if he threatens to leave, certainly the stock would get hit, I would believe, because I think from there, the wall just comes crumbling down on what this thing really is.
John Cougar Mellencamp's song, I believe. Okay, just, I'm not a huge fan. I think on my now 890 song Spotify playlist, Guy's first playlist, I think there might be 3 John Cougar Mellencamp or John Cougar or John Mellencamp, whatever iteration of that. Not that you care.
Huge fan.
Under the Boardwalk is one of them. I think we had a conversation about that. Okay, so let's broaden this out a little bit because I'm curious. Your thoughts. As we sit here today, again, today being Thursday, we saw an S&P 500 once again making, and how do you pronounce the word?
Again.
G-A-I-N.
Again.
How do you pronounce the word? No, that's not what I asked you.
It's not Adami language.
G-A-I-N. Gain.
Yeah.
So if you put an A on in front of it, why would you change that?
I'm not going to, I could come up with other iterations of words that don't fit that narrative, but please continue.
Again, we talked about this. The S&P made a new all-time high, 53.62 and change. It's given a little bit back today. What is your sense as to what's going on? Is it sort of the absence of any negative news? This market continues to levitate on the back of all the things we seemingly talk about each week, money flows and those things. And quite frankly, a lot of the stuff that Steve Eisman talked about a few weeks ago on this podcast.
It's a tug of war between, again, the Fed cutting rates and what it really means if the Fed is cutting rates in a slowing economy. So it's really interesting. So we had the market selling off with rates coming in for, I would say, a day or a day and a half, which has been my call that you should be fearful when that actually happens.
Which is happening.
And then I think it stayed down enough days where the interest rate sensitive sectors actually started to run up again. I mean, like, okay, rates came down, the market's down, the world didn't end. Let's start buying interest rate sensitive sectors that didn't really go up on the day the rates were coming. So we're kind of stuck here. What's interesting is today you had the ECB cut rates for the first time in this cycle. Expected.
Yeah.
But what did they do? They raised inflation expectations today and they cut rates. Okay, this is the world that we are living in.
Well, they've given up.
Well,
I mean, that to me says we're throwing in a towel. I don't know that,
well, no, that's the world we're living in. They did it because they said they were going to do it. They didn't want to disappoint the markets. Fed has not said they're going to do anything definitive yet. But so we're in this tug of war, and then you got Goldman Sachs out with this report today that
wave of dollars,
that come in historically.
Wave.
We're up against it in the first 2 weeks of July. Money comes in. Again, it's about buying and selling, and there's, to your point, money's trying to find a home still, and so the market continues to grind higher. But when you have Microsoft, Nvidia, and 2 or 3 companies accounting for 21% of the S&P, basically 3 companies, 20. That's not a great place, especially, and I'm sure I'm wrong, but if I'm right that Nvidia may be a little bit top heavier, what that means for the market. So ignore the S&P 500 for a moment, I guess is what I'm saying. I know you look at volatility.
I do.
I know, and the VIX is literally, it's under 12 again.
The VIX closed below 12 a couple times.
Right.
We find ourselves right in the 12 and a half or so.
And what has happened here historically, Guy, over the last several years is it doesn't stay down there for long. It has a quick pop up to 3 or 4 handles to 16, maybe to 17. We get that kind of elevator down quickly, things reset, and money comes in. Until that's proven differently, until this buy the dip mentality is gone, this is where we're going to stay, and that's fine. I want to focus on individual names in the time period, but I think that's what we're up against, guys. So I don't want to say we're getting clarity because I think things are actually getting murkier over time. We are seeing continued signs of retail spending slowing, while inflation, yes, is slowing, but not in the areas where you need to see, namely wages, which are going to impact margins of companies and so forth. But podcast for another day. Just know what you own and don't get caught up in this
So
stuff.
let's talk about that because individual stocks, I have a memory like an elephant. And if you recall, in the Gladiator days, they put some elephants out there just for shits and giggles, some tigers and stuff.
Yep.
I'm a big fan.
Yeah.
No, I am just saying.
Yes.
Why are you looking at me
I loved it. I was trying to think where you were going next. You literally make my brain leave.
Of course I do.
Okay.
I do that on purpose. I mentioned that because I do remember things. And I remember it was Danny Moses. And now this is going back to the halcyon days of this podcast, and you were pointing out the merits of owning Walmart. And as we're sitting here today, Walmart itself made an all-time high of $67.38. And outside of a couple hiccups to the downside, most notably probably in the fall of 2023 when the stock went from about 57 down to 52, you don't get pullbacks in it. You don't get pullbacks in this name.
Right.
It's just slow and steady wins the race because, as I've said, and if you've said more eloquently than I, it's Walmart's world. What we're living in lends itself to exactly what they're doing. And 1 quarter of inventory build notwithstanding, they've done everything right. They're a great operator in this environment. Now, with that said, there's the flip side of that coin, and we're seeing it in the dollar stores on one side. We're seeing it some of the higher-end retailers as well. What's funny is, Danny, Lululemon, which has been disastrous over the last, 6 months or so, they reported earnings. You got a knee-jerk higher on the back of a stock buyback and on the back of their inventory seemingly getting in line, a little bit of margin improvement, but their ills have not been fixed by any stretch of imagination. I only bring that up because there are have and have-nots right now in the retail sector. And one of the haves is Walmart, and one of the other halves is Costco. Very similar models.
All you have to do is read those 2 quarterly reports and the transcripts of them to understand what's been going on within the economy. Again, not to belabor it again, but why Walmart is doing so well is the higher-end middle-end consumers coming down to them. They have cheap groceries. That drives people there. Right. So we know that their delivery platform has been growing.
When you go grocery shopping, do you go grocery shopping?
Sometimes.
Where do you
We don't really keep a lot in the house.
You do not?
No. What are my staples? What are the things that I really want to have in the house?
Yeah.
Some frozen treats, some hummus, some crackers.
Hummus.
Peanut butter.
I think I must have a peanut allergy because if I eat too much peanut butter, I love peanut butter.
Yeah. Where are we going with this?
Huh? I'm not going anywhere because when I go into the supermarket, which I do, I start in like produce, like my fruits and vegetables, and then I sort of make my way
love bananas.
Through. Bananas.
Yeah.
Really?
Yeah.
It's interesting. High level of potassium.
Yeah.
Sorry, Amanda's probably yelling at me, but I just like talking about different. I'm curious as to how people shop.
Interesting.
Do you go with a list or no? You just sort of wing it.
I just wing it. We got to cut this whole part.
No, we don't. Please continue. Walmart.
That's it. I got nothing else to say. They're doing, and you know what else? You know what else? A lot of these other people are sick and tired of going to these retailers in general that everything's locked up now.
Yes.
So people want to order online. Amazon's crushing it in many categories, but the goods business is obviously exploding, and Walmart's been gaining on that. And so it's now not cheap. It hasn't been cheap for a while. Solid dividend. Good buyback, great company. That's it.
There's a reason why. See, I'm upsetting you, and I know, and I do this on purpose because I like to rattle your cage a little bit. But there's I like to think I'm a man of the people. Like I would have done well in a Coliseum because I think people would have gravitated towards me. Right? Thumbs up, thumbs down. That's where that started. That whole thumbs up, thumbs down.
That part I know. Please. Okay.
But there are other people that not so much because as much as they think they're a person of the people, they're really not. And where are you going with this time? I hope I know where you're going. I've never met him. I'm sure he's a lovely guy, but my sense is that Barry Sternlicht has never walked into a grocery store, right? He has people that do that for him. Good for him, by the way. He's earned that right. Yeah. But he's talking about, we need to cut rates. We need to cut, right? He's up on that pedestal.
He built his business off of...
It's infuriating.
He's built his business off of lower rates.
Yes or no?
And it's infuriating. It infuriate you? What he did this last few weeks is infuriating. Well, let's talk about that. So Starwood's a public company, but within that, the STWD, within that, there's a private REIT. Blackstone has that private B REIT. Starwood has S REIT, has basically $10 billion in it. So they cater to the private client. Oh, we're going to pay you your dividend each month. Don't worry about the NAV. We promise you it's good. So this Starwood REIT is investing in multifamily, industrial, office portfolios, and there's been some redemptions, Guy. And so on the fly a few weeks ago, they basically changed the redemption policy from what could be 2% a month, roughly, I believe, to 0.33% a month or something like that. So they reduced it because they believe that people shouldn't want to sell at these prices in these properties. He actually went on CNBC and complained that the Fed isn't cutting rates quick enough. They're not doing anything quick enough. And therefore, we're doing our investors a favor by gating. What else are they doing? They charge a 1.25% management fee on this $10 billion, Guy. They're going to cut it to 1% in the meantime. How generous of them. So they're cutting their fee to you, but you can only redeem 0.33% now a month versus what it was before. And it's just hilarious to me and actually upsetting that he's blaming the Fed now for these issues. They were buying everything in sight. Cap rates didn't matter. Cap rates 2-3%, whatever, when the Fed was accommodative. You can't have it both ways, guys. And nothing I hate more in this world and in this business more than hypocrisy. And that was pure hypocrisy on their part. So that upsets me, Guy.
It should. It's extraordinary.
Now I'm heated.
Okay. Yeah. By the way, you sing, you like different, you do a great job with the voices. Yes or no?
Sometimes.
No, I'm
not going to compliment on my own voice, but there are certain.
I am complimenting you. Okay. Whether you take it or not, it's your decision.
All right.
But I'll say this. You do an amazing Bob Marley.
Yeah.
You really do.
Thank you.
And one of his hit songs is Redemption
Song.
Look at that. Yeah. See, I know these things.
Yep.
So maybe Barry and his crew should sort of, I don't know, maybe they should channel their inner Bob Marley. Because, some of these things, and again, I'm not getting on the guy, but it is so transparent. Because I will tell you, and this is just my opinion, the people that got screwed at zero rates, it wasn't the rich people. It was the middle and lower, without question. I mean, they got squeezed because it's the people that own shit that did well. And then when rates go higher, to combat the inflation that they were begging for, who gets screwed?
Yep.
Not the rich people.
No.
It's the people on the... So when he's talking about lowering rates, it is so exquisitely self-serving. By the way, not completely, somewhat unrelated, but not dislike what's going on with Elizabeth Warren and what's his name from Vermont, Bernie Sanders, who were begging or pleading the Fed to lower rates. And I think they, in their heart of hearts, they believe it will help their constituents, but they don't understand the economics of it. So, I don't know. I bring that up because, to your earlier point...
Redemption songs, the songs of Barry.
Look at you. It's a nice
all
job.
I ever had.
So be careful. Be careful, because I think the market is wishing for a rate cut. I think they're wishing for the wrong things. And I understand why these people are out there championing it. You're looking at the wrong thing, Danny Moses.
I agree. And of course you want a rate cut. The markets want a rate cut in general because you want cost of finance things to go down. I get it. And if inflation does abate to the level it should, they should cut rates. But to get there, to complain about it now where, what he should say is, listen, we never could have built the firm that we did if it wasn't for the Fed and their accommodative policy. QE 1, 2, and 3 or 4 have been amazing. As a matter of fact, during COVID, the Fed and Treasury were buying literally assets next to us. Oh, in TALF, we got to do this. No, that's not what he says. He just says, crying about this, please. He should suspend the management fee completely right now is what he should do. And mark his book down appropriately. And by the way, it's not just Starwood. You know, we know this is going on in a lot of these, quote, private REITs in general. And so we'll see what happens. But again, this is the stuff kind of that people want to willfully ignore that matters because the mark-to-market has not occurred. And it has been an elephant, go back to elephant, you know, moving through a python or whatever the hell that
Anaconda.
A
big snake.
Continue. Let's go.
You know, that was a shitty movie, by the way, Anaconda.
I know. John Goodman.
Jennifer Lopez was in that movie. John Goodman was not in Anaconda.
He wasn't?
John Voight, I think.
Who was the exterminator?
What exterminator?
Wait, what am I thinking of?
Anaconda's when they're on a boat and they're trying to kill the big snake.
Oh, what's the snake? Whatever. Scratch that out of here.
No, don't
anyway.
scratch anything out.
Go ahead.
I want to take you down this road as well because I struggle with it. I really do struggle with this. I don't know what the market should be rooting for here, and the volatility that's once again in the bond market is interesting. And rates have gone, 10-year yields have gone from 465-ish down to 4.25-ish, pretty much in a straight line. And I think in a large part that's on the back of some disappointing or some soft economic data in the form of the ISM and some other things. So rates going lower under those circumstances are probably because things are slowing down. The flip side of that coin, we've seen a number of different auctions over the last couple of weeks, which haven't gone particularly well, which have made rates go higher. So you have this push me, pull you, Dr. Doolittle shit going on. And right now, lower rates is winning. But I got to be honest with you, Danny. I don't know what the market should root for, and I don't know what I'm rooting for either at this point.
Well, we've talked about before, it's all about supply and demand in the bond market. And what's driving it? Is it inflation or is it these auctions and people's lack of willingness to buy these things in droves? Keep in mind, Guy, also, we talked about this last week and rates came down in conjunction with this, whether there's a cause and effect. QT was tapered. We began in June. Now, instead of a $60 billion roll-off in treasuries, it's 25. Fed can play around with however they want to basically play around with certain parts of it. So if you're a soft landing person or no landing person, you should have no issue with the 10-year yields staying flat or even moving higher.
Agreed.
And if you can get the 2-year yields to come in because the Fed's going to indicate, and again, at some point they are going to cut rates, Guy. It's inevitable.
I agree.
Whether it's 2 times this year, none, 3, potential, whatever it might be, we are going to go through a rate cut cycle. But will it matter or not? And I guess, Guy, that's the push and pull right now. And the benefit of the doubt, as I said a few minutes ago, remains with the bulls. Or the benefit of the doubt is the proof is on the shorts. And here you have an article coming out in Bloomberg on Monday that short selling is dead, that they're extinct. Short sellers are gone. Doesn't matter. You think that's bullish?
No.
Not you, but it's bearish.
Yes.
Okay. So all the signs are here. Again, I know, you guys, every frickin' week you come and say, this is it. It's got to be the top. That's not it. No. I just want to say it all it's done since we've been talking about is you get these moments in time where the market does correct a little bit over a couple days. And we don't sit here and say, here it comes. We knew this was coming. But just understand, to your point that you just made, which I think is a good one, what is the driver in the bond market? What does it mean? And what is the driver in the equity market? And I don't think you're going to see a signal to when it's time to really take your money off the table in the equity market. But if you do get a Tesla retrenching a lot, or you do get an Nvidia retrenching a lot for, quote, non-fundamental reasons, at least at the moment, that's going to scare people a little bit and I think create a lot of volatility in the market. So
here it comes, walking down the street, getting the funniest looks from everyone we meet. You know this.
Yes, I do know that.
But I know you're struggling with it.
No, because you
just
said it instead of sung it, and now I'm...
Right.
Yeah. Okay, go ahead.
Okay, I'm just saying.
Yeah.
I got some funny looks. We got a lot of funny looks. I got some funny looks earlier this week myself, just looking at my screen. I'm going to give you a date and a time. You ready?
Okay.
You're going to know it. Don't look at me like, oh, my God.
Okay.
Don't look, because you're going to know this. May 6th, 2010, 2:45 p.m.
Flash crash.
Thank you, because I knew you knew this.
I was sitting there. I remember that moment.
And we got some funny looks earlier this week when Berkshire Hathaway went down 99%.
Yeah.
99%.
I think they took that one off the tape.
Well, they did.
I didn't have my limit order in at $1. Right.
A lot of people didn't.
Yeah.
I mentioned that because, once again, you hear glitch and all these things. It was funny. You also had some glitches this week in terms of making phone calls.
Yeah.
Apparently,
really
you
coincidental,
if you were an AT&T, whatever, user, you couldn't make calls to Verizon. And I'm not familiar with any of this stuff. It didn't seem to impact me. But it's odd that you had a couple of these things happen. And look, I'm not throwing conspiracy shit out there, but everybody seems to explain these things away like it's no big deal. Well, Nobody's able to been explained to me May 6, 2010 in any cohesive or ways that I understand.
Oh, you don't think it was one trader that caused that in London?
So walk me through what you saw.
Well,
this
I don't
week
think
and gave you some funny looks.
Well, they said the New York Stock Exchange said they were doing a software upgrade that went
bullshit.
Wrong. Right. Okay. But whether that's true or not, here's my thing. You want to be a conspiracist. We have heard in the last 2-3 weeks, cybersecurity, people on alert. We've seen FBI reports on this. Ticketmaster, then a lot of hacks have been going on, right? In the time, all of a sudden you get an AT&T, like you said, their system went down. It was nuts. And then basically within 24 hours, or that happened 24 hours after this New York Stock Exchange glitch. I'm not saying it's Russia or China or anything, just saying how vulnerable we are in general in these systems. We depend upon electronic trading and electronic technology for everything. And so do I believe that there is something nefarious here? I actually do. I think the explanation was weak, a software upgrade on certain names. Now, there was only a handful of names. I didn't see if any of those names had any particular meaning, like a defense company like that. So let's not go down that route. But it is an odd thing. And yes, they're taking them off the tape. It's embarrassing. Meanwhile, at the same time, we get the launch of a new exchange out of Texas.
Well, that's going to be thank you very much, because I was going to bring the next thing. Obviously, what we need is another exchange.
Just what we need.
Right or wrong?
Right. No, right. More competition for exchanges. So Texas wants to be basically the kind of anti-woke new place. So there are some companies may be upset of the listing requirements on what you required on New York and NASDAQ. Citadel itself, who is an investor in this Texas Stock Exchange, maybe doesn't like what's happening in kind of the payment for order flow side on some of this stuff. So everyone has their own motivation. So this new exchange is going to launch. It's going to launch in 2025. They're going to try to take listings of companies in 2026 and kind of market themselves that way. Will it matter? I don't know. Every exchange that's tried to come on in the listings business hasn't really succeeded. So it'll take a lot to get there. But the point is that everyone has a different angle on why they would want a new exchange. And you can probably figure out Citadel's motivations from BlackRock's motivations but I'm sure there's a company that wants to relocate to Texas that would list there that would be Tesla. I'm sure is somewhat people's thoughts of that. But anyway, that's going to happen, a while from now. But it is interesting that you are getting more news flow in that in terms of new exchanges. So
what do you make of, I thought personally, I was surprised the GameStop thing came back, and it came back probably early May, I guess, is when the thing reared its ugly head.
Roaring
and
kitty.
Then seemingly it sort of gave it back up. I thought by the middle to end of May it was over. All right, it did its round turn, and stock went from 16 to 65, GameStop, and round tripped the entire thing.
And then back up.
But here we are. So now the stock's up basically 100%-ish.
Where is it right now? 31,
$35. I mean, again, it's not. My point is, it hasn't gone away. And now there's seemingly some people saying we need to investigate and we need to look into this. And it probably does warrant an investigation. I'm hard pressed to believe. Look, I find it unsavory again to use that term, but I'm trying to figure out what's illegal. I mean, here's a man that just posted a couple pictures on Twitter.
Well, there's
what
two
happens
pieces.
on the back of that is really he's got nothing to do with.
These retail investors. And I say that I don't mean that in a negative way, retail investors in general, but the ones that truly believe and are buying GameStop and HODL and all this stuff, the ones that hate short sellers, guess what? They should hate that they're being manipulated right now for whatever reason, what's going on.
Well, think in Braveheart. I mean, they are, they're the masses.
They're the HODLs. That's right.
They're the ones that are going to be sacrificed for the good of whomever.
And so this stock, they pre-announced the quarter. They did raise some capital around the $20 or $21 level, wherever it was. So they did improve their balance sheet. They took advantage of this. I wouldn't be shocked if they do it again. They're reporting earnings next week, which they already pre-announced, which were worse than expected. So this guy, Kitty, basically leans forward in one picture. And then this last week actually showed the options trade that he actually made and what he owns. And it's in hundreds of millions of dollars worth of notional value. And I think that the options traders confirmed the open interest on that it may indeed exist. Whatever. We don't know if he's been selling stock against it, whatever it may be, right? It is not a fundamental reason this is happening. It's technical. And what I hate, again, to talk about this again, is stock trades down, it goes up, people FOMO, they buy it. It goes down, they said, I was so stupid, they sell it. Goes up, they buy it again. This stock has literally hundreds and hundreds and hundreds of billions of dollars potentially of damage that is occurring on the market cap now, which is obviously run up to where, I don't know where we sit right now, but has run from effectively $3 billion and probably near $8 or $9 billion here as we sit here somewhere in that level. But anyway, it's just noise, but it is indicative, guy,
that's
of the
point.
fever of the market. And it is meaningful to me. And since we started this podcast, we've been on these names. the AMCs of the world for a while, the names, the Bed Bath & Beyonds of the world, because to me, it's a thermometer of the retail activity. And it goes to Goldman's comments they made about flows. They're seeing a lot of positive retail flows coming in. They think it might continue, and they could be right. But own quality. Don't trade this crap.
And look,
this is not.
And I bring it up it's not an indictment of GameStop or AMC. It's really not an indictment of anything other than the fact how we started this show. Win the crowd, and you will win the freedom. In this case, win the crowd, which he's clearly done, and he's going to win his freedom in the form of windfall gains for him vis-a-vis these options.
Who, Roaring Kitty? We don't even know who we don't know if it's him.
We have no idea. My point is, though, that's what this whole thing's become. It's winning the crowd. It's getting the people behind you to do the work for you, and then you sit back and sort of watch and see how it plays out, because I think that's what's going on here. And this speaks to, by the way, some of the things that David Einhorn said earlier this year, and I'm paraphrasing to a point, but talking about how market structure was effectively broken. His words, not mine. He actually used the term broken. I think it's been fundamentally changed, and I don't think, Danny, it's been changed for the better. Nor what's changed for the better is the New York Knicks, who find themselves on the outside looking in to this NBA final. And they were a lot of injuries. They don't deserve to be there. I do think probably the two best teams in the league are playing. So you have the Celtics of Boston, storied franchise, sort of the New York Yankees of basketball. Is that fair?
Yeah, pretty good.
Against the Mavericks of Dallas, right?
Yep.
The Kyrie Irving-led Mavericks of
Luka
Dallas.
and Kyrie, yeah.
Well,
and he coming back into the Boston Garden.
Exactly.
And Porzingis, who should be playing, who came from Dallas. A lot of interesting.
A lot of things.
I like Boston in the series. I know it's expensive. You got to lay like minus 215 to win 100 in it. I think Boston wins this series. Let's just go with that.
Fair enough.
Everybody wins on something else that occurred this week.
Well,
in
let's
the
talk
NBA.
about that, because it's the whole TNT thing. I mean,
Barkley
there's a lot
upset.
going on, but everybody's upset.
Yeah.
But it speaks to what's going on in terms of rights, the rights of the NBA, the rights to broadcast the NBA. And if you think about it, the NBA arguably is as a popular sport globally as maybe soccer. Maybe not as much, but you think about the reach of the NBA, it's pretty significant. So I understand why people are clamoring for this.
First of all, again, we go back to Amazon. But so Adam Silver, I mean, what they've done in the NBA is amazing.
He's been
created
a great
global brand.
He took over for David Stern, who was a visionary, and he's taken it to the next level.
Actually saw Silver the other day walking into a restaurant with his family, and I was walking out. It was pastis down in the meat. But anyway, that's another thing. He's probably out.
You just doxed him. That's what.
Well, that was whatever.
I'm
you can't
kidding.
miss it. Anyway, so they had a old media rights deal, I think, that was worth $25 or $26 billion. This one is $76 billion spread out over 11 years. And to your point, Charles Barkley was upset because TNT and Warner have been slow to come to the plate on this thing. So who basically is now going to own these rights, or the majority of them? Amazon and Peacock.
Mm-hmm.
Peacock is going to broadcast games. So these streaming services are now moving again, live sports on Amazon, what they're going to be doing. So it says a lot about everything that's kind of transpired within cable and media. And by the way, gambling, again, this is all about saying, getting to the consumer, being able to pick and choose what you want to watch, a la carte, so to speak. So a massive deal for the NBA. I don't begrudge it at all. I think it's fantastic. It's what people are willing to buy, but a big bet by these streaming networks on what they're going to look. And some have the playoffs, some have regular season, some have Thursday, some have Sunday basketball, but whatever, good for the NBA. And the value of these new franchises, what is going to be the value of these franchises, just continues to grow. So as an NBA owner, as a privately owned, these things being, quote, stocks, they have done nothing but go up in value.
Who's your favorite team in the NBA?
Atlanta Hawks.
Dominique Wilkins. And I'll tell you why, because you're a University of Georgia graduate. Neek went to the University of Georgia.
And you should love them because John Sterling was a broadcaster.
I know this.
Dominique is magnifique.
By the way, I think Dominique is one of the most... Now, granted, he's in, top 100 players of all time, top 50 players. I think he is the most underrated superstar of all time. If he had played in New York, he'd be unrivaled in terms.
Well, think about
he was a freak.
Michael Jordan and him were peers, and so he would have got overshadowed in some of the slam dunk contests and so forth. But yeah, remember the Boston Garden Game 7 with Larry Bird in the Eastern Conference? They each scored like 20-something points in the fourth quarter.
Ridiculous.
Epic. But yes, so
the human highlight film.
Yes,
Dominique Wilkins.
Yep.
Of course,
Gerald
as a
Wilkins.
Knicks fan, we had his brother Gerald, who paled in comparison.
Let's move on. Although he did also win a dunk contest.
No, we're going to move. We are going to move on.
Yep.
And this is what we're going to move on to. In the first Saturday of May, what happens?
Kentucky Derby.
Kentucky Derby. That's at Churchill Downs.
Yeah.
And then 2 weeks later, they moved to Pimlico in Baltimore. Not nearly as nice of a place, but that's the Preakness Stakes.
Mm-hmm.
Typically, historically, 3 weeks later, they go to Belmont in Elmont, New York. Is that fair?
That is correct.
Belmont and Elmont.
So Belmont, Elmont. There's another one of those words. How do you pronounce Elmont? How do you pronounce Belmont? All right, go ahead.
But now, no, that's not what's happening because they're refurbishing. They're putting a lot of money into the track. Is that true?
True.
So during that time, they need to find another place to run the race.
And the New York Racing Authority, the NYRA, happens to own both Belmont and Saratoga.
The Spa. So you're headed up to the Spa today.
Momentarily.
Yes. You're getting on a train. Good for you.
Thank you.
By the way, if you've never been, you should go. If you've ever seen the movie Seabiscuit, which is a great movie, they filmed a lot of it at the Spa.
Correct.
Tremendous.
Correct.
It's like going back in time. I think in a lot of ways you'd like to go back in time because your picks in the Kentucky Derby.
Let's get to it, guy.
And in the Belmont were,
I'm putting on my glasses.
And in the Preakness were awful.
Yeah.
But you're convinced now that you have the winners
now. The rain is gone.
Johnny Nash.
It might rain again, so we'll see. All right. 10 horses in this.
10 horses.
1.25, not 1.5, because you can't run it there, which is for the next 2 years.
As you told me a couple weeks ago.
Right. There's a horse that will be the favorite that will win this race. It is the 9-horse Sierra Leone, who finished second by literally a nose in the Kentucky Derby. Chad Brown is the trainer. He is switching jockeys, which I like, to Flavian Pratt. Goodbye, Gaffleonis. He didn't like the way he ran him in the Derby.
Goodbye, Stranger.
Goodbye, Stranger. He had to deal with 20 horses. Here it's 9. He is a fast horse. I think he wins the race. There are 2 horses that I'm concerned about or that I would throw in. So let me just start. Sierra Leone to win in place. You don't bet a horse that's 2-1 to show. It's not worth it. So win in place, probably not worth the place, but I think he wins. So right outside of him, the 10 horse is Mind Frame. And the best jockey in the world is Arad Ortiz. I mean, in Pletcher.
And he's at the Spa.
Yeah.
He is like
Pletcher
kills
and Arad, they do well there, okay? The problem is he's only had 2 starts in his entire career, but both have been fantastic. And he's only raced twice, but he looks like he could be there and hit the board, as we say. But the one horse, Seize the Gray, D. Wayne Lucas, it was by Arrowgate, remember, is the father of this horse, who destroyed it in Saratoga when he was in his prime. This horse actually, Seize the Gray, ran twice as a 2-year-old up in Saratoga. And I always like horses that have been to a track and are familiar with it. They're like humans. You play home and away and all this stuff where you're going to. So I'm think that the 9 wins. However, I love a 1, 9, 10 trifecta box, okay? And maybe you want to put an exacta box just to protect yourself in cases the 1 or the 10 comes over the 9. I think 2 of those 3 horses finish in the top 2. So 9 to win in place, 1, 9, 10, you know what, exacta box and tri box.
I like that. I like what you're doing.
Mystic Dan, who won the Derby, came in second in the Preakness, I think is going to be tired. I don't think, does he have a chance? Sure. There's some other names. Antiquarian looks good. Dornoch, they're all kind of there. Some of these ran in the Derby. Anna Marie that we've seen. I just think this 9 horse is by far and away, if that thing gets a clean ride, it's not going to lose.
1, 9, 10. Exacta box, 1, 9, 10. Trifecta box.
But the 9 to win in place.
The 9 to win in place.
That's it.
Danny Moses.
And I will be there.
Breaking shit down.
Yeah, I will be there.
On the On the Tape podcast.
You got it.
By definition, I mean, if you think about it, it's your time.
It is my time.
And you know what? Think about what
By the way, Heaven Can Wait, great movie. It's your time,
Warren
Joe.
Beatty.
You cannot change what is written.
Warren Beatty.
James Mason, Warren Beatty.
James Mason. Great.
Leo Farnsworth. You remember what his first name was before he got taken out of the body on the bike?
Not.
Joe Pendleton.
Wow.
They need to remake that movie.
By the way, James Mason
and Warren Beatty
Con
should be James
Cannon
Mason's role. Yes.
In The Verdict.
That's right. And Diane Cannon was in this movie.
We can do this all day.
Anyway, let's get out of here.
I've enjoyed this. I know
you have Market Call coming up.
I do. You get upset at me because I throw you off the scent sometimes, but I always bring you back.
Yes, you do.
I always bring you back.
Yes, you do.
And I've enjoyed this conversation.
Me too.
Typically, I'd say stick around, but there's nothing to stick around. This is
the 2 of us today.
So I hope you've enjoyed this, folks.
Right.
I've enjoyed it. You've enjoyed it. We're going to talk next week for sure. And one way or another, we're going to have a very interesting conversation about the Belmont Stakes in Saratoga and Nvidia post-split. Have a good weekend.